Mr. Investor, today I'm so excited. I'm not a financial advisor, make sure you do your own research, but we're going to be covering this latest EV SPAC play. So we have GIK, which is known as Gig Capital Free, and it's going to combine with Lightning Emotors. So basically what they are is a Colorado-based, manufacturer, and it creates EVs for commercial fleets. And these EVs are from class 3 all the way to class 7. So they've got vans, work trucks, buses, motor coaches. Very exciting. As soon as you wake up, I want you to check this GIK stock on a New York Stock Exchange. Right now, the after hours is 22.7% up, so it's opening up at like 15.50. There's so many EV SPACs every single day, so I want to figure out what makes this a good investment. This is not financial advice, this is for entertainment only, do your own research, but I want to figure out why should I invest in this company. So we're going to watch a little video to show an introduction to who they are, we're going to look at their current market share, and we're going to look at where we think they're going to be going.
Lightning Emotors specializes in commercial electric vehicles, from medium-duty vans all the way up to motor coaches. You'll see in our factory lots of customized vehicles, like shuttle buses with wheelchair lifts, like large Class 6 delivery trucks with refrigerators or with custom lifts on the back. Our ability to deliver a very wide variety of technologies, order sizes, configurations, and customizations in a very cost-effective manner to our customers makes us highly unique and specialized in this space. What you see in our factory is flexible lines both to build the powertrains and to assemble the electric vehicles. Our flexible lines allow us to adapt quickly to a wide variety of orders and a large quantity of orders as they come in. Not only is this facility the largest commercial electric vehicle production facility in the United States today, it also has capacity to continue to expand at a very fast rate. Sitting on a campus with over 1 million square feet today and an incredible labor pool in northern Colorado, we are committed to expanding at the fast pace that this market wants to take us. Lightning Emotors is the product leader today, with more medium-duty commercial electric vehicles on the road than any other OEM. This product leadership is not just a function of volume, but also a function of product quality and product features. We lead today, and we're committed to leading going forward.
So what do we think, guys? Let me know in the comments below. Make sure you hit the like and you hit subscribe on this video. So let's take a look at their investor presentation and see what this company is actually about. So as of now, their valuation is $651 million. That's what they're currently valuating themselves at. And they're going to have this transaction. They're going to be merging with this empty SPAC company, Gig Capital Free. And Gig Capital Free is going to give $273 million in cash to the balance sheet. This is for Lightning Emotors to fund their growth, get more sales, and fulfill their true potential. So when we look at the team, we can see Tim Reeser here. He's had over 25 years experience in technology. He's founded and led multiple IT and clean tech companies with successful funding and exits. So these people are no idiots. They're like the real deal. We're seeing guys here like Bill Kelly. We see 35 years of automotive experience and manufacturing experience. Former VP of Advanced Engineering at Borg Warner. And we're seeing the CFO with over 35 years building companies as well. Straight into key takeaways, let's see what Lightning Emotors can actually do. So they're focusing currently on class 3 to 7 BEV and FCEV vehicles. They've got partnerships with Borg Warner, Ford, Plug Power. BP is actually their investor. And you can see here that they're both scalable and they protect their intellectual property. They've also had over 10 years of research and development. So in their total addressable market, there is a total value of over $67 billion. And this market is going to continue to grow as regulations come into place. If you look at their customer base, they have Amazon there, they have Seabury, they have Cox, DHL. They're projecting $2 billion in revenue by 2025, and they've had 2 years head start in customer validation. So they've literally been working with loads of different fleet owners. They've got 120 vehicles on the road right now and 1,500 vehicles on order. So these guys' growths are basically pushed by the massive transition into vehicle electrification. So all of these fleet owners are going to have to, make a move because there's loads of regulations coming in. There's loads of corporate mandates and grants available as well. So they need to take advantage of this. Lightning Emotors has already taken advantage because apparently they have 50% of the market. They move very fast and they sold basically to 30 fleets that operate currently 500,000 vehicles. So what more if they need to electrify their whole fleets? There's up to 500,000 vehicles in their current customer base that they could potentially electrify. When we invest in companies, we need to see, defenses. We need to see economic moats. These moats need to stop competitors just coming in and grabbing market share or copying technology. So Lightning is currently saying that their established strategic partnerships are the foundation for their growth, but they've also got this amazing technology, unbelievable second-by-second telematics software, and they also have operational expertise, so they're leading in that kind of industry. Not only that, but they've got contracts in place with current customers that is going to lead them to $1 billion in revenue by 2025, and they're saying this is just from their sticky customer base. That's not accounting new sales, because they're predicting $2 billion in total projected revenue by 2025. Not only this, but 100% of their 2021 revenue forecast is already contracted in, and that was as of the third quarter of this year. So next year they're going to be having their revenue coming in, they're going to be providing that service. All they have to do is scale up and deliver their vehicles. This next slide I found particularly valuable because they were talking about their products that they have. So in terms of direct sales, they sell class 3 to 7 trucks and buses. So they manufacture the complete vehicle, and they offer both battery BEV and fuel cell FCEVs. They've got the highest uptime backed by supplier parts and service, and they sell powertrain solutions. They also have their telematics system, so it's going to help you be efficient, make sure your organization and fleets are run on big data, and you're able to utilize artificial intelligence in order to make more money. So they see this kind of software and telematics as a continuous reoccurring revenue stream. Not only that, but if we go and see over here, we can see energy as a service. So they're moving like ChargePoint. They're going to have a complete charging solutions providing charging stations, and they've got patented mobile charging. With this comes 10-year contracts, so that's 10 years worth of revenue from that charging station. Imagine that. As Biden comes into power, are we going to see these guys get some funding for infrastructure? They are also helping their commercial fleet owners move into electrification for their fleets by providing financing. So here they're going to have, a financing revenue stream. They've got a finance partner in place, which is General Capital, and they're strategically differentiated with OEMs like Ford and GM. These guys are moving like a jack of all trades because they're in every single class vehicle. They're in 3, 4, 5, 6, and 7. So moving from ambulance vehicles all the way over to maybe minibuses. You've also got some of these electric cable cars, and that can also help with airport transmissions. In class 6, you see we have the DHL van here. So we've got delivery kind of vans, long haul trucks, big trucks, and we've got class 7, which is coaches. What they offer commercial fleet owners is, customizable, specifically designed vehicles to make sure that it's running most efficiently for their convoys. They are basically trying to make themselves competitively priced in, and they're trying to offer the biggest savings for these commercial electric vehicles, whilst also enabling them to, view telematics and run with utmost efficiency. So here we can see the total addressable market. So from the class 3 all the way to the class 7 vehicles, we've got over $67 billion in 2018. That was the total addressable market then. So we're now in 2020, and as we see this electrification move over, how big will this grow? As you can see here, the total unit sales was 1.5 million across class 3 all the way to class 7. They've got dominant 50% of the market share between vehicles class 3 to 6. And they're always in number 1 or number 2 position for every single class type. They're claiming that the way that they've had a head start on the market is because of their over 10 years of regular engagement. So they've built up relationships with these kind of fleet owners, and by continually engaging in them, they keep them at the front of the minds as we transition into zero emissions, electrification of fleets, and clean energy. By offering all types of solutions, they can see that there will be compounding revenues as customers expect to expand their proportion of EV in their fleets. Their complete customer solution involves vehicle specifications, charging, and financing. So they have real B2B customers in place. So if we look here, they've got like a sales cycle or sales pipeline where they've made significant progress, and this is how they take their customers through it. So they've got a lot of people in the final stages here. But as we can see, they basically outreach to loads of fleets. They've got 130 fleets currently in this stage. They do technical validation to see what specifics they may need, 16 fleets in the stage, and then they're looking at the total cost of ownership, and they've got 25 fleets in the stage. So potentially they could have a lot of orders coming through just through their pipeline. In terms of initial contracts and purchase orders, they've got 20 fleets with new orders, and 10 of these fleets have repeatable orders. So if you take a look now, their key customers have ordered over 1,500 vehicles. And if you look at what kind of vehicles they're producing, you can see what kind of industries these are in. So here on the left we can see they've got parking service companies, they've got global e-commerce players as well here. You can see little Prime vehicle there, US real estate service firms, they've got US cable providers, they've also got European logistics operators, DHL there, and US fleet operators. So this right here was crazy. They're saying they're miles ahead of XL Fleet, Helion and Nikola. And the kind of twist that they're putting on it is that they already have zero emission vehicles revenue now, and they're expecting to grow profitably. When comparing themselves to XL Fleet, Helion and Nikola, they're saying that their models will only come into play in 2023. So they've got $150 million in binding purchase orders already, and they've got $800 million pipeline. In terms of short and medium haul vehicles, they've got 120 zero emission vehicles in play already. And they're saying the XL Fleet, Helion and Nikola have zero right now. Here they're looking at a $67 billion total addressable market, and they're the clear leader with a dominant share. So their competitors today, Green Power, we know Green Power Motors, right, the buses and shuttles. Workhorse here with class 3 to 5 delivery vans, baby. In terms of school buses, Motive is their nearest competitor, and trucks is C Electric. They're saying in the next 2 years though, they'll see that trucks will start to be competed by PACCAR and Mercedes. In terms of their customers, they own over 50% market share in electric vehicles across classes 3 to 7. So this is based on the trucks expected to be shipped throughout 2020. So on the right here you can see all of these companies, and on the left you can see that they've shipped out 78 vehicles, right? Whereas all other manufacturers together collectively have shipped out 65. And although this looks like they're ahead, like if people were to start getting orders and to start scaling up, this could easily flip on them. So currently their selected fleet owners are people from Amazon, we've got DHL here, IKEA, Cox, Plug Power. So these are all current fleet customers. When we look at their kind of trend, we can see that a lot of cities are now introducing zero emission zones. So this has happened in London, and they've been spreading the zone further and further. So what we're going to see is a lot more regulation, and this regulation is actually going to drive potentially more sales as we see more commercial vehicles and fleets becoming electrified. So in 2023, this is just for California alone, we can see they want 100% zero emissions for new shuttle airport buses. By 2029, they also want public transport authorities to have 100% zero emission vehicles. And then there's a clean trucking law that will be in place by 2045. So it's a while away still, because I think the transition is going to take a while. So people like Helion and that's why investors need to be patient with Helion, because it's going to take a while for that to be implemented just in California, and they're one of the strictest regulating cities. So corporate mandates, we're going to see loads of major corporate corporations want to now electrify their fleets, including Amazon, IKEA, Microsoft, BP, we've got DHL, Walmart, Google. If we move into grants, lots of governments are investing, and currently they have $1 billion per year in state and federal grants. Wow, that is how much being issued out. So the industry is now also at an inflection point in which they are reaching a lower total cost ownership than ICE vehicles without the federal grants. So to this day, you can see that they've received over $120 million in orders just in Q3 in 2020. And this is going to help them through 2021. If we take a look at this table on the right, we can see the amount of units in thousands that are ordered. 96,000 units in terms of global commercial EV sales, and it's run all the way up to 473,000 by 2040. That's what's expected. So this is 4.9 times growth. And you can see here that they're expecting their market share to go from 1.4% in 2020 all the way to 7.7% of global commercial EV sales. So they're looking to be a big player at almost having, 8% of the global market. So this is the immediate operational savings. So this is for people who have current fleets that have ICE, combustion engines. And this is the cost comparison. So what people need to know that if the price is right, then these companies will buy it. And the only way to know this is by analyzing this. So we can see here, they're looking for a 2020 maintenance and monthly fuel cost analysis of a shuttle bus. And this is based off 4,500 miles per month. So a gasoline version will cost $2,925 a month in fuel and maintenance. Whereas if you're comparing this to the grants with a Lightning E-motor vehicle, it will only be $563. So this is in 2020, they were checking this out, $563. So that is 80% less, in terms of fuel and maintenance costs per month. We have to take this with a pinch of salt because right now they're factoring in those grants. However, if we look at 2022 when there's no grants going to be available, then we're going to look at the real savings here compared to gasoline. And now we need to compare their savings as Lightning E-Motors to their competitors. Are their competitors more cost efficient in the long run? Here they're saying $552 per month now is the cost difference. That's a big difference now compared to their initial $2,000 saving. Competitive moats are very important. We don't want to see companies come in and just smash them to pieces. So here they're saying they've got intellectual property trade secrets, they've got their telematics, they're trying to work on infrastructure, so they've got like a servicing network including vehicle financing and nationwide charging, and they also got low capital expenditure to assemble, efficient manufacturing, and they've got reliable and validated suppliers. So what are they going to be doing in terms of growing their intellectual property portfolio and protecting it? So they have 10 inventions here in a table, and their patent status is currently from pending to provisional on file to application in process. So what we want to see is them secure these patents, because they're saying these give them the economic note and advantage. So we've got stuff such as power steering, we've got their powertrains, and we've got mobile charging solutions with battery storage. These are all key ingredients in order to becoming an economically effective company that is protected by an economic moat. So they're saying that their telematics solution can actually drive customer retention because it shows them that they've got greater efficiency with their fleets. It's not just a fancy gimmick, and they have real-time fleet performance in comparison to their competitors. So competitors in terms of miles per kilowatt is 1.4, and they're saying their Lightning E-Motor Class 3 vehicle can get 1.8 miles per kilowatt. So they're saying that they're very effective. When we look at the actual metrics of what they're offering, they're going to be charging $1,495 in the first year for their solution. In the second year, it'll be $495. They expect a churn rate of less than 1% and an implementation rate of 100%. They got partnerships with all types of guys. So for their chassis, bodies and components, they have Ford. They also have Hino. In terms of their motors, transmissions and batteries, they got Borg Warner, Romeo. They also have in partnerships with Delta, Plug Power. And you can see they've got fuel cells here, infrastructure, and it's their channel partner. And in terms of software, they've got Woodward's. So looking at their specialty vehicle programs, the way they're allowed to access all these kind of markets and address them is because they partner with people like these guys. So they got recreational videos. Their vehicle partner for that is Winnebago. Ambulances, school buses, they've got Rev. Shuttles and box trucks here. They've got delivery trucks and coaches. So for every single industry that they're going into, they're partnering with specialty companies within that industry. So we're always talking about how if Hyliion can access the hydrogen market, they'll be a big player. Here, you can see Lightning E-Motors has powered with Plug Power to create a fuel cell powered Class 6 truck. So if you know about Plug Power, you know they're a major player in the hydrogen market. Globally, they supply, fuel cell forklift trucks. They've got 30,000 in operation. And if Lightning E-Motors is able to partner with these guys, it's going to be a Mazzolini. Imagine they've got their first vehicle currently in service in November 2020. This has a range of 200 to 400 mile radius. And if they are able to access this market, this kind of fuel cell powered truck will allow customers to drive further distances, longer ranges with larger payloads as well. So this is going to be a huge partnership potentially. And Plug Power is also creating this hydrogen infrastructure at 100 plus locations. So this is like a huge competitive moat for both Plug Power and for Lightning E-Motors. This is a really juicy collaboration and partnership for them. Get into my ride. So you see here they've got motor coach companies in the US as well. So this is ABC company, and they've got major customers such as Facebook, Genentech and Google, which are committed to having zero emissions. So with this US provider, they have 750 locations and they provide this unique support network. And here on the right, you can see that they've compared themselves and they've said 50% of the new electric bus coach costs, they are currently chopping it in half. It's only 50%. And who they compared themselves to was BYD of China and Proterra. So they said they can also deliver this electric kind of repower in 6 months rather than a 2-year delivery time. Also, if we look at their kind of contracts and financial visibility, we can see here on the right they've got a total addressable fleet market of 450,000 vehicles, and this is just looking at the US, So they're looking at state of California being the top one with 100,000 vehicles that may need to be replaced. And out of their 11 customers, 9 of them are currently operating the vehicles. $120 million in repeat orders in Q3, and they've got even more in the surging pipeline. So they're looking to explode into this market and be able to provide this to everybody. You see their management team, you can see here their CTO used to be Tesla. So he's Borg-Warner and Tesla. They've got a highly experienced team here with people that are ranging from 10 plus years all the way up to 35 plus years. Looking at their financials here, we can see 195% compound annual growth rate. And from March 2020, they said they had a contracted, backlog of orders, purchase orders, and that's 28 million. And in September, they now have a backlog of 150 million orders. So in terms of $150 million of orders, this could keep growing as more people are coming to see, these guys are providing really good products. They're cost effective. This order and this customer purchase order is going to backlog. It's going to have so much more. And in terms of the amount of orders they've received and they can fulfill, they've received, the purchase orders for 100% of 2020 and their 2021 revenue. So this is going to keep them going for a while. Looking at the bottom here, we can see where their growth rate is going to come from, and we can see that most sectors are going to continue to grow, especially, systems for OEMs and energy as a service and their commercial EV fleets. So the drivers of their growth is currently in place. The only concern I have for this company is everything looks good for now, right? For 2020 and 2021 while we have these grants. But boom, when we see here, you've got the grants for 2021, and in 2022, they no longer have these grants. So we're going to see the total cost of ownership. They compared themselves to ICE vehicles, but they need to compare themselves to other vehicles. So that needs to be relevant. Compare themselves to Workhorse, who is currently delivering at 0.03 cents per mile, which is mad. Can they match this fuel efficiency to other competitors? Also Helion is producing, I don't know how much it was, something like 30% savings in fuel rate over 7 years. So it's a 30% or 35% total cost ownership saving. So can this company compare themselves to major competitors, and will we be able to see whether or not they are the top company for initiating savings for these commercial vehicle fleets? So right now they're dominant because they're the first to jump on the wave. They have 50% market share. They have the highest revenue among their peers. So in 2021, they've got all of these binding contracts, so they're getting the money in. They're also accelerating their orders through Q3. And EV adoption is now coming into play, as well as infrastructure. So in terms of looking at this company, can they actually compete with the main competitors? We need to see the total cost of ownership. We need to see how fast they can scale up, because I know they've got a massive factory, this factory up here. And will they be able to have some good returns over time? When you compare yourselves to the likes of NIO, Tesla, Workhorse, XPeng in terms of the EV market, you really need to look at total kind of ownership and see that, can you guys actually beat price points that these people are providing? We've also got people here like Helion. We've got Lordstown Motors, who are bringing some really cheap, nice pickup trucks, charge point infrastructure. Can they beat these guys in terms of costs and value? So this stock is looking juicy, but can they continue to be market leaders? That is the question. Make sure you check this stock out, guys, and make your own decision. This is not financial advice. For me, I'm going to open a position with them today, I think, a small position. And I'm going to see how it goes, and also see if they can establish any more partnerships, any more contracts. That's Mr. InvestALOT over and out. Thank you for watching. Make sure you hit the like button. It really helps out. And join the family. Click subscribe. Be part of my family. I'll see you soon. Much love.